Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Griffeo. Emily, on the surface, the index right now looks like things are chill. Mm-hmm. Not at all the case, as we just talked about with volatility. The stock's making big moves. You had no shortage to choose from.
Yeah.
Where do you want to start?
Well, we can go non-US because Stellantis ADRs are on the move right now. But again, we almost have to refresh it minute by minute to see where we are right now. So we're down 6% in Stellantis. But the headline caught my eye that Jeep owner is willing to help its suppliers pay tariff costs to withstand the initial shock of President Donald Trump's trade war. Investors seemingly noticing that that's going to squeeze margins for Stellantis. I guess that's why the stock is down so much. And it was also interesting because this is a day where the U.S. is down. People have been talking about European stocks coming back, and we're just not seeing that. Europe ended in the red, and ADRs also are down.
Yeah, I think a lot of we had Gina Martin Adams on earlier, and she was talking about decreasing U.S. exposure and buying outside of the U.S. as a result of the vulnerability of U.S. companies. And one of the reasons they are so vulnerable is because these are such globalized companies. And what she's seeing is a reversal in the decades-long move to globalization. And she sees that at least sticking for now. Okay, so Stellantis on your radar. Here in the U.S., Dollar Tree also moving.
This stock is up about 6%.
This is like one of the best performers in the S&P 500 today.
I know. And for, a company and a macro environment where consumers are going to get crushed, we could potentially see a recession coming. I guess it makes sense, Tim, that a company like Dollar Tree would be higher, people finding safety. They got a buy rating from Citi. They had rated that stock neutral. We have an upgrade. Citi analysts said that they anticipate the higher across-the-board tariffs will be positive for the discount retailer, and that if they see prices moving from $1.25 to $1.50 or $1.75, now I thought everything cost $1 here.
I was just going to say, it's not called $1.75.
I know, but those seem inevitable, and that consumers will be accepting of the magnitude of change.
So they have the pricing power because these products are at a level where consumers won't see as much of an increase.
Yeah.
Because $1.50 to $1.75 on a percentage basis, yes, is significant, but not, on a nominal basis.
Right. You look at that and it's still,
$1.75.
It's still $1.75.
I did see this analyst note, and he acknowledged that about 50% of the company's products are still subject to higher tariffs. So they are going to certainly get hit if those end up happening. Okay, finally, AppLovin.
Okay.
We're going on this was a best performer last year.
Yeah, so this stock is up about 5%. We did have reports from CNBC that they are going to merge AppLovin's proposal to merge itself with the U.S. subsidiary and eventually the global business of TikTok. Bloomberg Intelligence said that this would help the advertising tech firm accelerate its reach beyond the typical video game clientele and into e-commerce, because obviously everyone is buying products through TikTok. BI also said, though, its bid could be crowded out by other potential bidders such as Amazon, Blackstone, and Oracle. But nevertheless, it was a piece of news that in all of this market mayhem did prove to push up that stock, at least for today.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.